Namaste dear students, welcome back to the online classes on corporate accounting 2. So before going to the problem section, so I just wanted to give you a brief introduction about general insurance. But before going to the general insurance topic, I wanted you people to know what is insurance exactly. So who are all the parties involved in insurance and how this insurance concepts work, so that you need to understand. So that is the basic requirement or to know about insurance. See, insurance means it is a contract. It is a contract between two parties called insured and insurer. Remember this? Insurance is a contract between two parties. One is insured and another one is insurer. So, this contract which takes place in between these two parties, so which is documented, so that particular contract itself is called as insurance. So now, who are the parties, that is insured and insurer, who are those, and how the contract will be happen in between them, that you need to understand. So as I said in a simple terminology, insurance means it is a contract between two parties. So one is insured and another one is insurer. See, insured is a party, one who pays the premium, to the insurer with the expectation of future risk compensation will be done by the insurer. So that means insured is a person who pays premium. Premium means a fixed amount will be paid. Clear? To whom he is paying? To the insurer he is paying. So what is his expectation? If any loss, if any uncertain things is happening in the future, if any uncertain incident is taking in place in future, so due to that uncertain incident, so what losses are going to happen? So against that loss, insurer has to compensate. Insurer has to compensate. This is the expectation of insured, and he pays the premium with this expectation only. Clear? So now, if we go to other part, that is insurer. Insurer is a party, one who receives premium from insured. One who receives premium from insured, and he promises if any future uncertainty happens, and due to that uncertainty, if the insured is going to face any kind of losses, those losses will be compensated. Those losses will be compensated by the insurer. Clear? So now, with this explanation, I think you can figure out, that is, insured means the person or the party, one who takes insurance policies, one who buys insurance policies. It might be a person, it might be a company, it might be a business, it might be anything. But one who buys the insurance by paying premium is called as insured. Is called as insured. Okay? And one who sells the insurance, one who collects the premium from the party or from the person or from business or from industry, anything. Clear? one who sells the insurance and collects the premium, they are called as insurer. Insurer is nothing but an insurance company. Insurer is nothing but an insurance company. So this is the basic meaning of insurance. So you must know this, you must understand this, and I believe you have already learned this topic in your previous semester. So, but still I wanted to give a light upon these topics so that you will have a clarity of this particular topic. So now let us understand what is general insurance. Now you have understood what is insurance as a normal sense, in the normal sense. So now specifically let us understand what is general insurance. What is general insurance? Meaning of general insurance. Insurance is a contract that do not come under the ambit of life insurance are called general insurance. That means the contract which will not come under life insurance, which is not a life insurance, the insurance contract which is not a life insurance, that is what, which will not come under the ambit means which is not a life insurance, that is called general insurance. The different forms of general insurance are fire insurance, that is the insurance took on fire accidents. Then marine insurance. Marine insurance means when you send the goods through ships to other country. So that is to waterways we send the goods, clear. So when you take insurance on such kind of shipments, so that is what we call it as a marine insurance. Motor insurance, that you all know that is motor vehicle insurance. Then accident insurance and other miscellaneous non-life insurance. Any other insurance which will not come under the life insurance is called general insurance. Okay. The tangible assets are susceptible to damages and a need to protect the economic value of the asset is needed. For this purpose, general insurance products are bought as they provide protection against unforeseeable contingencies like damage and loss of the asset. Like life insurance, general insurance products come at a price in the form of a premium. See, the tangible assets, that is the products or any tangible assets, have that is also exposed to uncertain risk. So when those products are exposed to uncertain risk, so that product might get damaged. Those products can be theft. Those products can become useless after some incidents. So these are all with the influence of unforeseen forces, unexpected incidents. So to overcome out of this risk, there is insurance came into exist. So that insurance is called general insurance. So which is available at a fixed premium, that is for fixed premium amount. So that is exactly general insurance and how the general insurance came into exist. So next let us understand about the features of general insurance company. So what are the major features of general insurance company? You need to understand that. So which is very, very important. So features of general insurance companies, that is number one, general insurance policy is a contract of indemnity. So underline that, it is a contract of indemnity in which the insurer agrees to reimburse only the actual loss suffered subject to the average clause. So that means in general insurance, the contract, whatever we do, that clearly states that the insurer, that insurance company, is going to agree to reimburse. That means if any loss happens, so insurance company agrees to reimburse, to pay only the actual loss suffered subject to the average clause. So only the actual loss will be compensated by the insurance company. So what this means, suppose assume that you have some product, you have some vehicle, like for goods you have kept it in your storeroom or godown. So you have kept around 1 crore rupees worth of goods in your storeroom, and you have taken the policy of rupees 1 crore. There was a fire accident took place and you lost 50 lakh rupees worth of goods. You have lost 50 lakh rupees worth of goods. So in such a case, the insurance company will not compensate you rupees 1 crore because you have taken the insurance policy of rupees 1 crore. So insurance company is going to compensate actual loss. What was your actual loss? 50 lakh rupees, correct? So only those 50 lakh rupees will be compensated by the insurance company. So that is the first feature of general insurance. Second, that is point B, general insurance contract is for a short period, usually a year. See, you have seen a life insurance, so which you have to pay for longest duration, 15 years, 20 years, 25 years, 30 years, correct? But general insurance period is usually for a shortest period. Shortest period means it is only for 1 year. Clear? It is only for 1 year. After each year, so you have to go for new insurance policy. After every year, you have to buy a new insurance policy. So next is that is a renewal of your policy. New insurance policy. Excuse me. New insurance policy or renewal of your insurance policy has to be done. Next point C, the subject matter is any physical property, asset, ship or cargo, etc. See, you can take the policy only against the physical existence product. Anything physically exists. So it might be a property or it might be any asset. So that must be physically exist. It might be a ship or it might be a cargo. Anything. It must be physical existence. Next is general insurance has only the element of protection and not the element of investment. See, general insurance gives you protection to your product, protection to your goods. Clear? So, that is what here we are clearly mentioning. It is the element of protection, not the element of investment. We promise you to compensate if in case there is a loss due to unforeseen incident, only that compensation will be compensated. Only those losses will be compensated. Clear? It is not element of investment. We never promise that we give the investment back. So insurance company never promises that investment will be given back. Okay. So this is the fourth feature of general insurance. Let us move further. Insurable interest on the subject matter must be present both at the time of effecting policy as well as when the claim falls due. See, insurable interest, that means from both the end they should have their interest to take the policy. Clear? So, at the time of effecting policy as well as when the claim falls due, that means at the time of taking insurance, the party, that is from the insurer and insured, both the parties should show complete interest. So at the time of taking insurance, who has to show the interest? That is insured. That is the party, one who is taking insurance, he has to show the insurable interest. At the time of claim, that insurance company should show the interest to settle down the claims. General insurance is a contract of indemnity. The insured can claim only the actual amount of loss from the insurer. So it is a contract of indemnity. Indemnity means whatever the loss has happened, only to that extent compensation can be claimed. As I said, one example, so that is, you have your godown where you have stored 1 crore rupees worth of goods, and there was a fire accident. Due to that, 50 lakh rupees worth of goods has been destroyed by fire, and 50 lakh rupees worth of goods is absolutely in mint condition. It is in very good condition, not even single scratch. So now you cannot expect the insurance company to compensate 1 crore rupees. Here in this case, because it is a contract of indemnity, insurance company will compensate only 50 lakh rupees, that is on the basis of contract of indemnity condition. So next is, general insurance does not have any surrender value or paid up value. See, if you have life insurance, after certain period, if you can't able to pay your premium, you can surrender your policy and claim the money. Or you can claim the amount whatever you have paid. But in general insurance policies, you don't have any kind of such kind of options. So you cannot claim any paid up value, or you don't get any surrender value in the in case of general insurance. For example, you have taken a vehicle policy, insurance policy against your motor vehicle. So you have taken for a year, there was not even single accident. So whatever the premium amount you have paid, that is gone. You cannot go back to the insurance company and claim that I have not met with any accident and give my insurance money back. Will you people go and ask? No, right? So that is what, you cannot ask insurance company to give money back of your insurance premium. So that which will not have any paid up value or surrender value. In case of general insurance, business profit is determined after making provisions for unexpired risk. So that means the business profit is identified after making the provisions for unexpired risk. So unexpired risk is very, very important. After identifying that thing, so we can identify the profit of the business. Loss is measurable in case of general insurance. See, when you have a general insurance, you have a fixed value for your product, a fixed price for your tangible asset, tangible product, or tangible property. So you have a fixed price. So value can be easily identified in case of general insurance, that is a measurable value. Clear? You can measure the value of your product. But whereas in life insurance, the life of the people is, it cannot be equal to anything. Clear? So you cannot measure. But in general insurance, yes, you can measure the value of your product or physical products. So next, dear students, we are going to understand about the difference between life insurance and general insurance. On the basis we differentiate. Number one, subject matter. So in life insurance, the subject matter of insurance is human life. So because we take the policies against life of the people. But whereas general insurance, we take the policies against physical assets, physical property. So, the subject matter is any physical property, asset, ship, cargo, etc. So, the element in life insurance has the elements of protection and investment or both. So, here we take the insurance policy against the protection and for investment also, for both purpose. But in general insurance, only the element of protection and not the element of investment. We never have any kind of support, investment support from the insurance company. Here we will enjoy only a protection element. Next is insurable interest. Insurable interest must be present at the time of affecting the policy. So, at the time of affecting the policy. But here, in general insurance, insurable interest on the subject matter must be present both at the time of affecting the policy as well as when the claim falls due. So, both the time insurable interest must be present. So, next feature of life insurance is and general insurance is duration. Life insurance policy usually exceeds a year and is taken for longer period ranging from 5 to 30 years. See, life insurance is always we take for longest duration. It is usually like 5 to 30 years of time. But whereas general insurance, we usually take the life of general insurance as, or the period of general insurance is normally for for a smaller period, that is for 1 year or less. Next is indemnity. In life insurance, it is not based on the principle of indemnity because we cannot measure actual loss in life insurance. So, as I said earlier also, the life cannot be measured. The life of the people cannot be measured in terms of money. So, we cannot evaluate them. Clear? So, that is why life insurance cannot be based on the indemnity principle, but general insurance is a contract of indemnity. The insured can claim only the actual amount of loss from the insurer. Next is loss measurement. Loss is not measurable in life insurance because there is no price tag for the life, correct? So, that is why you cannot measure the loss. But in general insurance, yes, of course, loss can be easily measurable because the general insurance is only made for physical products, physical goods, ship, cargo, etc. Next is surrender value or paid up value. In life insurance policy, this surrender value or paid up value will be released by the insurance companies. So, but in general insurance, we can't pay any surrender value or paid up value because this takes place for very shortest period, that is for less than a year, for a year, not less than a year, for exactly a year. But whereas life insurance policy, it exists for a longest period, as I said 5 to 30 years, people have paid their premium money, clear? So, there must be a surrender value, there must be a paid up value. So, next is contingency of risk. There is an element of certainty. So, here in life insurance, yes, there is a certainty is expected at the age of so and so age, people will die. So, this certainty will be there. So, there is an element of uncertain and there may no claim. Because see, you cannot say there might be always a negative impact. You have taken a vehicle insurance. That doesn't mean that you met with an accident every year, right? You have to get an accident. You have taken the policy and you must make an accident. Is that a rule? No, right? There are cases where you never go with this kind of incident because it is uncertain. That uncertainty may not come also. So you cannot say uncertainty will happen every time. There are cases where there is no any uncertainty happen. In your family only, you can observe, you can ask your family members from how long they are paying their vehicle insurance and how many times they have claimed. There are cases not even a single time they have claimed, but they are paying a vehicle insurance from past 10 years, from past 20 years. Clear? So that is what contingency of risk. So anyways, we'll stop here. We'll continue the remaining theoretical part in the next video. And after that, we'll start the problem. So till then, take care. See you soon. Bye-bye. Stay safe and take care of your family members. Bye. I'll come back with one more video very soon.